Top dividend stocks for passive income and financial freedom. Welcome to our channel. Today, we're diving into an exciting topic that could change your financial future: top dividend stocks for passive income and financial freedom. If you've ever dreamed of earning money while you sleep, you're in the right place. In this video, we'll explore what dividend stocks are, how they work, and why they can be a game changer for your investment strategy. We'll break down the key factors to consider when selecting the best dividend stocks, including yield, growth potential, and company stability. Plus, we'll share our top picks that have consistently delivered impressive returns, helping investors like you build a reliable income stream. But it's not just about numbers. It's about creating a lifestyle where financial stress is a thing of the past. Imagine having the freedom to travel, spend more time with loved ones, or even retire early, all thanks to the power of dividends. So, whether you're a seasoned investor or just starting out, stick around. By the end of this video, you'll have the knowledge and tools to start your journey toward financial independence through passive income. Let's get started on this exciting path to wealth. Understanding dividend stocks, what they are and their significance in investment portfolios. So, what exactly are dividend stocks? Simply put, these are shares in companies that return a portion of their profits to shareholders in the form of dividends, typically on a quarterly basis. Unlike growth stocks, which reinvest earnings to fuel expansion, dividend stocks provide a steady income stream, making them a popular choice for income-focused investors. The significance of dividends in generating passive income cannot be overstated. When you invest in dividend stocks, you're not just relying on the stock price to appreciate. You're also earning regular payments that can supplement your income. This consistent cash flow can be reinvested to purchase more shares, creating a powerful compounding effect over time. Moreover, dividend stocks play a crucial role in achieving financial freedom. They offer a reliable source of income that can help cover living expenses, allowing you to pursue your passions without the constant worry of financial instability. By building a diversified portfolio of dividend-paying stocks, you can create a sustainable income stream that supports your lifestyle and long-term goals. In essence, dividend stocks are more than just investments. They're a pathway to financial independence, providing both immediate income and the potential for long-term growth. Let's explore how you can harness their power in your investment strategy. Benefits of investing in dividend stocks. Advantages of including dividend stocks in your investment strategy. Investing in dividend stocks offers a multitude of benefits that can enhance your overall investment strategy. One of the most significant advantages is the regular income stream they provide. Unlike other stocks that may only yield returns through price appreciation, dividend stocks pay out a portion of their earnings directly to shareholders, typically on a quarterly basis. This consistent cash flow can be particularly appealing for retirees or anyone looking to supplement their income. In addition to regular dividends, these stocks also present the potential for capital appreciation. Many dividend-paying companies are well established and financially stable, which means they often experience steady growth over time. As the value of these stocks increases, you not only benefit from the dividends but also from the rising stock price, creating a dual opportunity for profit. Moreover, there are tax advantages associated with dividend income that can further enhance your returns. In many jurisdictions, qualified dividends are taxed at a lower rate than ordinary income, allowing you to keep more of your earnings. This tax efficiency can make dividend stocks an attractive option for long-term investors looking to maximize their wealth. In summary, incorporating dividend stocks into your investment strategy can provide regular income, potential for growth, and favorable tax treatment, making them a smart choice for building financial security. Criteria for selecting top dividend stocks. Key factors to consider when choosing dividend stocks for investment. When it comes to selecting top dividend stocks for your investment portfolio, there are several key criteria to keep in mind. First and foremost is the dividend yield, which measures the annual dividend payment relative to the stock price. A higher yield can indicate a more attractive investment, but it's essential to balance yield with the payout ratio, the percentage of earnings paid out as dividends. A sustainable payout ratio, typically below 60%, suggests that the company can maintain its dividend payments even during economic downturns. Next, assessing a company's financial health and stability is crucial. Look for companies with strong balance sheets, consistent revenue growth, and manageable debt levels. Financially sound companies are more likely to weather economic challenges and continue paying dividends, providing you with peace of mind as an investor. Lastly, consider a company's dividend history. A consistent track record of paying and increasing dividends over time is a strong indicator of a company's commitment to returning value to shareholders. Companies that have a history of raising dividends, often referred to as dividend aristocrats, demonstrate reliability and a focus on shareholder returns. By focusing on these criteria, dividend yield, payout ratio, financial stability, and consistent dividend history, you can make informed decisions and build a robust portfolio of dividend stocks that align with your financial goals. Top dividend stocks to consider. A look at some of the best dividend stocks currently available. When it comes to investing in dividend stocks, several well-known companies stand out for their strong dividend records and market positions. Here are a few top contenders to consider. 1. Johnson & Johnson, J&J, operating in the healthcare sector. Johnson & Johnson is a leader in pharmaceuticals, medical devices, and consumer health products. With a dividend yield of around 2.7%, the company has a remarkable history of increasing dividends for over 58 consecutive years, showcasing its commitment to returning value to shareholders. Recent performance metrics indicate steady revenue growth, driven by its diverse product portfolio. 2. Coca-Cola, Co. As a global leader in the beverage industry, Coca-Cola has a strong brand presence and a wide distribution network. The company offers a dividend yield of approximately 3.1% and has consistently raised its dividend for over 59 years. Despite market fluctuations, Coca-Cola's recent earnings reports show resilience, with solid demand for its products. 3. Procter & Gamble, PG. This consumer goods giant operates in the household and personal care sector, boasting a dividend yield of about 2.4%. Procter & Gamble has a long-standing history of dividend increases, having raised its dividend for 65 consecutive years. Recent performance metrics highlight strong sales growth, particularly in its premium product lines. These companies not only provide reliable dividends but also demonstrate strong market positions and consistent performance, making them excellent choices for dividend-focused investors. Strategies for maximizing dividend income. Effective approaches to enhance returns from dividend stocks. To truly maximize your returns from dividend stocks, implementing effective strategies is essential. One of the most powerful methods is to reinvest dividends through dividend reinvestment plans, DRIPs. By automatically reinvesting your dividends to purchase additional shares, you can take advantage of compound growth over time. This strategy not only increases your share count but also amplifies your future dividend payouts, creating a snowball effect that can significantly boost your overall returns. Another crucial strategy is diversification within your dividend portfolio. Investing in a variety of sectors, such as healthcare, consumer goods, and utilities, can help mitigate risks associated with market fluctuations. By spreading your investments across different industries, you can protect your income stream from sector-specific downturns, ensuring a more stable overall return. Lastly, it's vital to monitor and adjust your investments over time. The market is dynamic, and companies can experience changes in their financial health or dividend policies. Regularly reviewing your portfolio allows you to identify underperforming stocks or sectors and make informed decisions about reallocating your investments. This proactive approach ensures that you're always optimizing your dividend income and aligning your portfolio with your financial goals. By employing these strategies, reinvesting dividends, diversifying your holdings, and actively managing your investments, you can maximize your returns and build a robust income stream from dividend stocks. Risks associated with dividend investing. Understanding potential pitfalls in dividend stocks. While dividend investing can be a rewarding strategy, it's essential to be aware of the potential risks involved. One significant risk is the impact of economic downturns on dividend payments. During challenging economic times, companies may face reduced revenues, leading them to cut or suspend dividends to preserve cash flow. This can be particularly concerning for investors who rely on dividends for income, as a sudden reduction can significantly affect their financial plans. Another risk to consider is the temptation to rely solely on high-yield stocks. While high dividend yields can be enticing, they often come with increased risk. A stock with an unusually high yield may indicate underlying financial troubles or a declining stock price. In some cases, companies may offer high yields to attract investors, only to reduce or eliminate dividends later. Therefore, it's crucial to assess the sustainability of a company's dividend before making an investment. Lastly, the importance of conducting thorough research cannot be overstated. Investors should analyze a company's financial health, dividend history, and market position before committing funds. Understanding the broader economic landscape and industry trends can also provide valuable insights. By being diligent in your research and considering these risks, you can make informed decisions that enhance your chances of success in dividend investing while minimizing potential pitfalls. Key takeaways on dividend stocks and passive income. In today's video, we've explored the world of dividend stocks and how they can be a powerful tool for generating passive income and achieving financial freedom. We discussed the importance of understanding what dividend stocks are, the criteria for selecting top performers, and the strategies for maximizing your returns. Remember, focusing on factors like dividend yield, payout ratio, and a company's financial health can help you build a robust portfolio that provides consistent income. We also highlighted the potential risks associated with dividend investing, such as the impact of economic downturns and the pitfalls of chasing high yields without proper research. By being informed and proactive, you can navigate these challenges effectively. If you found this information valuable, we encourage you to subscribe to our channel for more financial content and tips that can help you on your investment journey. Your support helps us create more engaging and informative videos tailored to your needs. Additionally, feel free to share this video with friends or family who might benefit from learning about dividend stocks. And don't forget to explore our related content on the channel for deeper insights into investing strategies, financial planning, and wealth building techniques. Thank you for watching, and here's to your financial success.